Hi traders, welcome to another episode of the Forex Weekly Analysis. So if you are the first time here, welcome and great to have you joining us. Just to quickly share with you what we'll be doing in this video is basically I'll be sharing with you some of the pairs and potential setups that I'm actually monitoring for this week itself. And through this video, what I hope to actually share with you is to show you some ways of which or some methods of which I do the analysis, and hopefully you'll be able to gain some insights along the way. Alright, and for those who have been following me and looking up for this video, really appreciate your support. And well, so let's jump into what we have for this week itself. So the first pair that I would like to quickly do a recap is actually the pound Canadian dollar. This pair we actually we did this analysis for the last week video, and the levels that we are actually looking at is around this region. Alright, and we can see that price has indeed pulled back to this region, and we can see the candle being rejected, right? We have a kind of a bullish as well as a bearish engulfing. Alright, but what I'm seeing here is that it's not a very strong rejection, but it is indeed no doubt this is a rejection. So what you want to look for is whether price can then close below your 382, right? So that will give you more confirmation on whether you want to short this market. Right, but definitely this is the key zone of which we expect price to reject and continue in its long-term downwards movement. So for this week itself, we'll be looking at the three pairs: the pound dollar, right, the Aussie dollar, as well as the Kiwi itself. So through these three pairs, I'll be sharing with you three methodologies: the harmonic pattern, the structure trading, as well as a 2618 pattern. So we jump to our pound dollar first. So for this pair itself, what you can clearly see on this chart, mainly the 4-hour time frame, right? So what you can see here is that price is currently moving in an upward direction. So previously it was a downward movement and then it ranged a little bit, and right now it has broken above the previous high. Alright, and from this itself, my personal sentiment on this pair is bullish. So what we want to do is what we can see is that price makes a new high, right, a higher low, and it has broken and closed below the previous high. So with this, what I want to do is I want to find a confluence level in which I'll be looking for a long opportunity. So what I do is I take out my Fibonacci retracement tool. I'll pull from my previous low to the recent high, and I want to look out for the 382 retracement as well as the 618 retracement level. So what I do is I can simply drop to horizontal line in this, right? And what we see is that, well, the 382 level has some mini confluence, some minor confluence over here at the previous high. Alright, and if you look at the 618 level, you can see how this level was previously tested, right? You can see resistance here, resistance here, resistance here, as well as resistance here. So now that it has broken above, this resistance would then now turn into a support level. So the region that we'll be looking at is definitely over here. Alright, so if price comes back to this level, what we'll be looking for is definitely a long opportunity. Alright, so this is for the pound dollar pair itself. So next we'll look at the Aussie dollar. So the Aussie dollar, what I'm looking at for this pair is there's advanced patterns over here. Not only one but two. So the first one that we identified, or I identified actually, is a bad pattern, right? So if we pick from the latest swing high to the latest swing low, we can see that this swing, the retracement made of it is up to a 50% level. So when your B point or your midpoint of this is a 50%, that would then tell us that there's a bad pattern, a potential bad pattern forming. So a potential bad pattern forming, the D point or the potential reversal zone, in short the PRZ, will then complete around the 88.6 level. So if we pull out our pattern, right, it will be something like this. Right, so your D point completes at the 88.6 level. right? So if I delete this away, this is a potential bad pattern. But what if we look right into a smaller area over here? What we have is a potential butterfly pattern, right? So if we pull our Fibonacci retracement tool from here to here, the recent high to the recent low, we can see that this point retraced up to the 786. So if our midpoint or our B point, right, retrace up to the 786, what we have is a potential butterfly pattern. And the butterfly pattern completes around the 127 extension. So if we pull our tool, right, our drawing tool out, what we'll be seeing is this butterfly pattern itself, right? So if I delete this, and you can clearly see that this tool pattern completes around this region itself, all right? So in this area. So what we have is a confluence of two advanced pattern. And let me just zoom out to show you how the overall trend is looking, right? The overall trend is still in a bearish momentum. It's still in a downtrend. So with this pattern, it's giving us some confluence and extra confidence that, at that level, that's where we want to look for a short opportunity. So if we draw in a horizontal line, we can see that this line coincides with previous resistance over here as well. Right, so this is something that I'll be looking at or looking out for in the Aussie dollar pair. Right, so for those who are trading harmonic and advanced pattern, this is something you want to look out for as well. Right, around this region of the 0.7889 and 789. All right, around that. Alright, so for this video, the last pair that we want to look out for is the Kiwi, the New Zealand dollar. So for this, what I'll be sharing with you, a method would be called the 2618. For those who follow Akil, he was the one that really inspired and taught us, or maybe taught the traders, right, how to actually adopt this 2618 strategies or 2618 methodology. Alright, so what it basically means is that you need to have a double top, and once the double top has been completed and confirmed, what we look out for is then a 61.8 retracement of that double top. Right, so what we see over here is that we have one top, alright, one top over here. Okay, let me take my right tool. We have one top over here and another top over here. And if you zoom down to your RSI, what we had is a divergence, because this second top is lower than your first top. But for price action, alright, the tops are almost equivalent in level. So there's this divergence, and this double top has indeed been completed because price has closed below its neckline, right, the midway point between these two tops. So this double top has been completed, and so what we are looking out for is a retracement of this top. So what we want to do is we pull a Fibonacci tool from this, the most recent high, to the recent low made, and what we are interested at is this 61.8 level. Alright, so if I draw in a horizontal line, what you can see is that this 61.8 level coincides with previous structural resistance as well. So if price do pull back up to this level, what we can look out for is a potential short entry. Alright, and your stops naturally have to go above this recent high. And your target can simply be using a simple Fibonacci extension. Alright, what you can look out for is your 127, right, this region. And of course, if you look at it, there's some minor support level as well. So what you want is you want to perhaps take off your profits slightly above this 127 level. And if you are more aggressive, right, you can simply trade off a previous structural resistance for your targets, right, somewhere around here or somewhere even further below. Alright, so that's all for this week. Hopefully that what I go through and cover in this video will give you some insights, and not only on the pairs to look out for, but definitely how we do and the techniques that we actually analyze the market itself. So if you do have any questions or feedback, right, on maybe certain pairs that you wish for me to cover, or maybe certain techniques that you want me to go a little bit more in depth, do feel free to drop the comments below. And of course, if you really enjoy and feel that this video really benefited you, do feel free and do support me by simply liking this video and sharing it with your friends and families who might benefit, right? And if you want to get updated, do subscribe to my channel so that whenever I post a video, you'll be notified as well. So until then, happy trading, and I'll see you soon.